Today we're speaking with Shankar Sharma, founder of G Quant Investec, who's joining in on this. Shankar, fabulous to talk to you after a while. You've been very vocal on Lenskart. I think one lone voice saying why all the hangama over valuations while there has been a barrage of criticism. How do you see just the numbers, the valuation and this IPO for what it is?
No, I have absolutely no interest in Lenskart. I have no interest in what happens to the IPO. I have no interest in IPOs coming from Indian tech companies. So I have no interest in this entire space. I just want to put it out there.
Yeah.
The reason why I found it a little, it's something worth commenting upon is that why is 8 times or 9 times revenue being considered so usurious today when similar companies just like 2 years, 3 years ago have gone public at 4 times that level, where Paytm was, I think, some 50 times revenue and Nykaa was also some 25 times revenue. And there were many others like that in that golden period for Indian consumer companies that went public in the 21-22 era. So I was just amused, or rather I was
maybe that's the
rather
reason. Maybe that's the reason, because what happened after that to investors in those IPOs that you've mentioned, that's become the red flag. Maybe that's the reason why so much of a concern. It's, bias from the past experience.
Look, that's the point. So they went public at 25 to 50 times. This poor chap is going public at 8 times or 10 times revenue. So they are, for whatever it is worth, and like I said, I couldn't care less if they get 0 subscription, or I couldn't care less if they oversubscribe 1,000 times. All I'm saying is that they are going public at 10 times, which is like half or less than half of what the other guys went at. They are already being conservative compared to the past ones. Please understand that that's the context I'm trying to put there. That, again, I've never met Peyush Bansal. Radhakishan Damani is a very old friend. Between the two, I mean, I'm indifferent to outcomes. All I'm saying is 8 to 10 times is a lot less than 25 and 50 times where such companies went public of the same category of companies. That's all I'm saying.
Shankar, hi, Alex here. I'm just going to add a question here, right? So if you look at Lenskart in particular and several other IPOs that have come up in the recent past, the argument has been that the investor that is getting in at the IPO stage gets very little left on the table for them. Do you see that as the case, or do you say that you look through that, particularly for a Lenskart, where the argument is don't look at that, look at the TAM, look at the opportunity here, and look at the prospects over the next 3 to 5 years. And anyway, you're expected to hold for the next 5 years. So why are you looking for a listing pop?
I mean, again, like I said, I'm not going to be applying. And I never apply in such companies' IPOs. There are far better ways to lose money in the market than to apply for Indian overvalued, vastly overvalued tech, so-called tech companies. So it's not about me. All I'm saying is that the IPO valuation itself is not as bad as it is being made out to be on social media and other kinds of media. Now, what happens thereafter is all left to the gods out there, whether an eyewear company should be trading at 20 times revenue post-listing or it should not be. The larger point that I'm saying is that Indian so-called consumer companies are crazily overvalued to begin with. All I'm saying is, as they say, who shall cast the first stone? There are enough papis who have done this pap. So one more guy comes, the poor chap is already underpricing himself relative to the previous ones. Why are you killing him? You should be killing all the anchored book investors and all the marquee investors and all the so-called AAA investors who invested in all the previous ones, which tanked 40-80%, or the merchant bankers for that matter. Don't kill this little kid, which is now shown up saying, okay, boss, unko aapne 50 diya, mere ko 10 de do, kya problem hai? That's my central point, only hinges on that. I don't wear specs. I have no interest in spectacles, but it's a grand spectacle to see all this drama being played out for no real good reason, to the best of my understanding.
Shankar, good morning, Neeraj here, and happy summer 2082. I start with this whole piece that a company can price the IPO the way the company wants. It's up to the investor whether she or he wants to subscribe or no. But my larger question to you, Shankar, is this, that because a lot of people, rightly or wrongly, separate, but I'm urging you to maybe think of or help investors who invest into IPOs after seeing a hunky-dory list of anchor investors, pre-IPO investors who are all noted names, right? And a lot of those companies are also trading below IPO price, below listing price, as the case may be. You've been a merchant banker for so many years. How do you see that particular aspect?
Did you read my article that I wrote yesterday on Money Control?
I did, which is why I said, right?
Okay, so that's where the central point is. This is all a nice little game of anchoring bias. If you look at it rationally, the whole point is using anchor book or using marquee investors pre-IPO, just in the past, VC names, PE names, you can get in India because there's so much dumb money. India is the dumbest IPO market that ever existed in the history of IPO markets. With so many billions of dollars flowing in from retail investors, you have to be out there as a merchant banker exploiting that. I'd never blame merchant bankers or the pre-IPO investors for IPOs that tank 50%.
Yeah.
Oh, man.
We've
you're
lost,
making a-
yeah, just in the middle of that very, very interesting conversation and commentary. Okay, there, Shankar's back. Shankar, please go ahead. We lost your voice just for a second.
Okay, so what I'm saying is that it is buyer beware. The larger point is the way the game works is that you somehow get an IPO done at a valuation which cannot be justified under any metric. Now, once you do that, the stock will fall, as we have seen. Stock fall 40%, 50%, 80%, as car trade fell, or Nykaa fell, and Zomato fell, and Paytm fell. And then at 80% down, you start to say, the market's like, hey boss, इतनी अच्छी कंपनी है यार, लोग 1.5 लाख करोड़ में ले रहे थे, अभी तो 25,000 करोड़ या 50,000 करोड़ रुपया हो गया, क्या प्रॉब्लम है? And that's where the whole nub of the problem lies. Nobody asks that even at 25,000 crores, is it still worth it or not? Everything gets anchored to the IPO price and the aftermath of the IPO price. It's a beautiful little game. I love it. That's the way capitalism works. There is a sucker born every minute. And in India, we have suckers getting born every microsecond. The millions, billions of small investors coming in. अरे किसी को तो उनसे पैसा लेना है. So these IPOs come and they take money from you. Why is anybody crying?
हम sucker के side में खड़े हैं. Shankar, you're talking to people whose stated purpose is to warn them.
Yeah. No,
your stated purpose is only to report. The stated purpose is that of the regulator, and if the regulator has cleared an IPO, that's where the whole debate ends. It is capitalistic system. Now, don't let's ask for controller of capital issues level era when everything good, bad, ugly was priced at 10 rupees. You can't have it both ways. You just can't have it both ways.
Yeah.
Okay. Shankar, one quick question. Since you mentioned relative valuations, when in your article as well, you wrote about how if a company was available at whatever market cap and then come down, at some point of time, it looks attractive. So I'm trying to understand from you. You may not have looked at Lenskart closely. You may have no interest in investing. But you mentioned the relative valuation of Lenskart at least thrice in this conversation. Would you believe that the IPO could get subscription because on a relative basis, compared to maybe some of the others, price to sales, Lenskart might be attractive for you?
So Lenskart made one fundamental mistake here, okay? They somehow made a profit appear like a rabbit out of a hat. I'm told it's like some other income or some one-time income and all that. Again, I have no interest in knowing what kind of income it is. But the moment you have an earning, you get attached to that earning something called the price to earnings multiple. And that's where the problem lies. Paytm went public when it had no profit. It had a huge loss. Nykaa went public when it was making, I don't know, some 2 crores or I don't know, some ridiculously low number. So that's the point. You should never show a good profit number before going public. This is the fine art of IPO marketing. Always keep us very tiny or actually a little negative number there so that nobody can calculate PE ratio. Then everything goes to the price to sales. Price to sales, Lenskart is not as bad as any of the names I mentioned in the past. They went public at 25, 50 times. This poor chap is going public at 10 times. All is good. Now, somewhere they made the cardinal mistake of showing a profit. And that's where the whole deck of cards is beginning to collapse. And that's where I would really advise companies, profit mat dikhao yaar, thoda sa loss rakho, to wo ratio nikal jayega. And then you're good at price to sales. That's the whole point I'm trying to make.
One more aspect to this, Shankar, and I assume that all of the many very well-paid advisors, the whole coterie of people who now make IPOs happen should be listening to this and taking notes. But I think what really sparked or maybe made this fire about Lenskart even larger is the commentary coming in from the management. Because when Peyush was asked questions about valuations, the response seemed to be, that's not my job. My job is to sell spectacles at good rates. Valuations, ye merchant banker log dekh lenge. As someone who's running the business, if this is what you're commanding, you're the face. You have to come and stick your neck out there and convince me as an investor why I'm betting on you. Because at the end of the day, you're betting on the founder promoter in a business like this.
I completely agree. That is where they really messed up. I don't think Peyush Bansal was adequately briefed by the team before he went on television. I mean, he should have been giving my pitch, basically, that my valuation is actually quite reasonable. It is 40-50% lower than what similar companies have gone public in the past. And the fact is that I'm leaving a decent amount of money on the table, given this big valuation on the price to sales basis. I don't think he was well coached. I don't think he was well briefed. And I think that's where I completely agree. That's where the whole thing started to go south, because he appeared to be completely nonchalant about this. As a promoter and as a founder, pricing is central to your showing up in office around the IPO days. I mean, ultimately, it's your company. It's like you're pricing your spectacles at 100 rupees, 200 rupees. And frankly, I don't even know what price of spectacles are these days. So similarly, you're pricing a stock. It is not rocket science. You can't say, no, it's somebody else's job. That is where really they messed up, or rather he messed up. And I completely would like to tell future IPO candidates, please get good media advisors on what to say and what not to say. Just like a political rally. These are very fine lines in which you appear to be very sincere or you appear to be very, very nonchalant. And I think, unfortunately, he came out looking very, very, like a hands-off thing.
Maybe that's where. But, having said that, we will look at the company for what it's worth, its value and its promise, which is quite exciting. And Peyush, we hope to have you back. Come and talk to us about what your future plans are for the company. Let me pitch it right here while I've got Shankar Sharma on the frame. Shankar, you come back when we get Peyush on and we'll have a great conversation. But we've loved chatting with you today. Shankar Sharma there, a veritable Shankar Sharma who never disappoints in quotes. I think one which will stay with me, at least I don't know about you guys, is India is the dumbest IPO market in the world.
Yeah, the dumbest IPO markets of IPO markets.
Which I do not agree with, but I mean, that is something that definitely stays with me.